Hey guys, welcome back. Joe Brunsman, insurance broker to the stars. Today, one of the most common questions I answer, and this is on a weekly or a daily basis now at this point, and it is, how much cyber insurance does my business need? So let's go ahead and jump on into it. Now, what's going to be the typical insurance guy answer to this question? It's as much as you can reasonably afford. Now, I don't particularly like that answer for a number of reasons. One, I think it's very non-committal. Two, it does nothing for you as a business owner. So like if I was in your shoes and I had to go out and buy cyber insurance and someone just says, hey, as much as you can reasonably afford, it doesn't really do anything for me. I understand why insurance guys do this. So part of it is a risk management aspect. So, we don't want to say, hey, you need $1 million and then some crazy occurrence happens and it's like it costs you $1.5 million. So then you come back and you sue us for $500,000. I get that, but I think that there really should be a more nuanced answer to this, and that's what I'm going to be getting into here in this presentation. Now, the problem with just asking that question, how much cyber insurance do I need, is, well, how much of what? Like, what is it in that cyber policy that you're concerned about? Is it overall limits? Is it sublimits? Is it specific coverages? You have to keep in mind that every policy is going to be different, and of course, coverages are non-standard. So to put it in another way here, it's you could have the same insurance company with two different cyber insurance policies. They both say they cover social engineering and cybercrime. But when you actually dig into the definitions and the exclusions and the true policy language, they may cover two entirely different things. So maybe the first policy form is exactly what your business is looking for. Maybe the second policy form has nothing to do with what your business is looking for. So put it another way, it doesn't matter how much you buy if you don't have the wrong thing. Now, I've covered that in a different video. You're more than welcome to look at that one. But let's just say you have everything you need in your policy. Well, maybe you go out and you say, okay, it has the coverages I need. I need to figure out how much I need. Let's look at a couple studies there. Well, you could look at the Ponemon Institute, Verizon Data Breach Report. There's a bunch of other ones out there. But suffice to say, there's some problems with these studies. Now, they do have their use. We'll talk about that here in a minute. But the problem is, if you just look and you go, okay, well, it says I need exactly this amount of coverage. I have exactly this amount of records. Therefore, that's what I'm going to get. There's some issues there. And if you're a nerd like me and you've read these and you've looked at the methodology of these studies, generally their data sets come from very large, multi-billion dollar, multinational corporations that probably have nothing similar with your business if you're watching this video. So you really have to be careful there. Don't fall into the trap of saying, well, this study said this thing, therefore I'm going to get this much cyber insurance. Because even if you start looking broadly across all the different studies, you'll see that there's fluctuations, very material fluctuations in per record cost, per record per industry cost, average types of breaches or cyber events, depending upon the industry. It just depends on what their data set is. Now, where do you actually find good data sets? Once again, that's really hard to do. There's no central repository. Frankly, if there were good data sets out there, you wouldn't be seeing the huge fluctuations in price that we're currently seeing in the cyber insurance market, because the businesses, these cyber insurers, would actually know what to charge. They wouldn't be overcharging, they wouldn't be undercharging, they'd be right there dead smack in the center. But we're just not seeing that. So that should be kind of an indication to you as a business owner that it's not as simple as it first looks. Now, the problem with basic answers is your business is unique. Your internal controls are unique. So here's an example. Let's take two pizza joints, and they're right next to each other. They make the exact same amount of money. They're obviously in the same industry. Well, they're going to have unique risks that could make for completely different cyber insurance policies. So let's say pizza joint number one, it's all cash. Well, in that case, maybe they're more concerned about a crime policy. Maybe they're more worried about misappropriation of funds by their own staff. Whereas pizza joint number two, once again, same industry, same revenue. Maybe they're only taking payment cards. They don't deal with cash anymore. It's just verboten at this point. So they're only taking debit cards and credit cards. You can order pizza online with pizza joint number two, whereas pizza joint number one, you can only pick up and pay cash. Well, pizza joint number two Now they're probably going to be worried about, okay, well, let's look at Pci Dss, the payment card industry data security standards. Maybe I'm really worried as the business owner of pizza joint number 2 that I could be facing fines, penalties, and assessments from Pci Dss. That's going to be an outsized cost. Maybe I have a much more sophisticated computer system because of the way I operate, the way I do business. So therefore, like ransomware, business interruption could be a big deal. Maybe they have specific pizza making machines that are somehow like hooked into the internet, so that we'll kind of go out on a tangent here, that they can automatically reorder supplies. Right, so maybe now they're worried about bricking coverage or et cetera, right? So you can see there, just with that kind of basic example, 2 very similar businesses, at least at face value, where if you look at those studies, they would say, hey, if you're a restaurant and you generate this much revenue, this is generally what other people get. The other issue with that is it's kind of the blind leading the blind at this point. So don't just think because the business owner down the street got $500,000 in coverage that you only need $500,000 in coverage, because as we just showed, it really just depends. And of course, not every breach is going to be the same. So pizza joint number 1, they're really worried about their own staff members potentially stealing money, right? Pocketing some cash. Pizza joint number 2, they're really worried about Pci Dss. Maybe they're worried about a ransomware incident with all of their computer systems, replacing all of that. If there's a bricking incident, a lot more sophisticated as far as cyber insurance is concerned with pizza joint number 2. And ultimately, what we have here is we have like single questions with multivariate answers. So there's a lot of different variables that go into this, which means that no one cyber policy is going to be appropriate for everyone, nor is a single limit going to be appropriate even for businesses within the same industry. Now, there is some use here to what I call ballparking. Now, here's a couple resources you can use. So there's Net Diligence, AppA, Chubb. If you just kind of go online, search for data breach calculator, there's a bunch of other ones that you can come up with, but start playing around with those as the business owner to really get a feeling for, okay, kind of what do I think maximum exposure here could be? And when you look at that maximum exposure, consider that the minimum amount of insurance. And we're going to talk about why that is here in a second. Some other major drivers of incident costs I think a lot of businesses really don't know about yet. Business interruption. This is dealing with, say, a data breach or a ransomware event. It's going to be about roughly 16 days. So you have to think about how much money your business is generating, and if that type of event could really impact your ability to bring in revenue. Now, if you're like a professional services firm, like let's say you're an accounting firm, in that instance, trying to get business interruption reimbursement on a practical level is kind of hard, because it's hard to evidence that like you actually are out this amount of cash. Circumstantially, I've seen it done, but if you can go back and redo that work, maybe that business interruption reimbursement isn't going to be as practicable for you as it would for, say, a manufacturing company where they just couldn't make widget for over 2 weeks, therefore they lost this amount of money. Next is going to be the forensics costs. These guys, I've seen quotes from $800 to $1,200 per hour, 40-hour minimum. So that's a pretty big nugget of cash there. Per record costs, you need to understand kind of what you're holding, because there's a difference. There's a pretty material difference in what the per record cost would be. So if you have healthcare information, generally that's per record more expensive than a breach of, say, PII. So that could be a social security number, which is generally more expensive than the breach of a payment card, which would be debit card, credit card type of information. You also have to think about the social engineering and cybercrime coverages. So, if you have a company where you're just constantly moving money back and forth, you're wiring money back and forth, you're using different portals, you could see really an outsized loss there very, very quickly. So it's not unheard of to see $1 million losses, $1 million+ losses, I should say, in that category. So that's something where, maybe your business, it's not necessarily so much concerned about PII, PHI, PCI. You're not holding a lot of the information, but you have a lot of money going back and forth, and you could definitely lose out on that. So that's going to be a major concern for you that will definitely change how much insurance you should be looking at for cyber insurance. And of course, third-party involvement, if you have, say, something that's cloud-based, So cloud-based providers, if you have an MSP, generally that ratchets up the cost just because there's kind of another party that's going to be involved with all this. So it takes a little bit longer. It costs a little bit more. There's kind of some other nuances on the back end that I'll skip here. But suffice to say, it does take a little bit longer and it costs more. So let's look at some better questions here. What is it that your business is specifically worried about? Now, me as an insurance guy, I've sold and consulted on hundreds of different cyber insurance policies to all types of businesses across the country. But ultimately, you are going to know your business infinitely more than I will ever know your business. So part of this is, yes, I try to help uncover what are those risks that you don't know about that I think would be important. But on the front end, we need to look at, okay, what are you and your business specifically worried about? What are those highest loss scenarios that we can think of? Maybe it's a breach of health information. Maybe it's a social engineering cybercrime type loss. Just depends on your business. So for example, let's say you're transferring millions of dollars a day, but your revenue is only like $600K a year. Well, then obviously we're looking at a different amount of cyber insurance and a different type of cyber insurance than if you were not transferring millions of dollars a day. You're generating, say, $600K in revenue per year, but you have a ton of social security numbers on your system. Two entirely different cyber insurance needs. What are you holding? Make sure you understand what it is you actually have on your system. That sounds like a dumb question to ask, but shockingly, a lot of businesses aren't aware of that. Do you have any contractual obligations? So let's say a $1 million policy might just be entirely appropriate for your unique business. Well, if you have a contractual obligation to carry $2 million in insurance, obviously you need to go with the $2 million policy at a minimum. And don't forget about those regulatory fines and penalties if you're in a regulated industry. Some other considerations for you as we close out here. Think about the different types of limits that are available. So there are something called overall limits, and that's generally what I think business owners are talking about. That's what they're trying to get to, is what type of overall limit of cyber insurance do I need? But then there's going to be sub-limits within all of this. So very rarely now do I see any cyber insurance policies where it's, hey, you got 2 million and it's 2 million for everything here, right? Once you blow through that 2 million, there's nothing left. Very, very rarely do we see that. What we're seeing now is various sublimits for all of these different types of risks that you could see out there. So maybe you have a lot of hardware that could be subject to a bricking attack. Well, maybe in that particular risk category, you can only get $250,000, whereas in this other policy, you're only getting $100,000. In that case, it doesn't really necessarily matter what your overall limits are. If it's 10 million per year in cyber insurance, if it's still limited to that $250,000 per year sublimit. Next, you need to think about aggregate limits. So you'll see there where it says 1/1, 2/2. What that really gets into is per claim limits and aggregate limits, and that's going to be important. So we'll just take a 1/1, right? 1 million per claim, 1 million aggregate. Now with that means that per claim, the insurance company will pay up to 1 million. And aggregate means through the policy period, that's the most they're going to pay out. So let's say you have a 1/1 policy and you end up having some type of event that costs $500,000. Well, that means that you've already spent $500,000 of the million, which means you only have $500,000 left for the rest of the year. Now, if you're a business and you're like, okay, well, I've got a cybercrime, social engineering concern. I also have, say, a ransomware concern, for example. Well, in that case, maybe you need to look at something called a split limit. So with that, there's always this option here, and very few people ask about this, but here's some examples. So you'll see the 1/2 is the first example there. And what that means is 1 million per claim, 2 million aggregate per year. So in theory, you could suffer 2 separate $1 million claims in a year, and that would exhaust your insurance for your policy period. Now, maybe you have a contractual obligation to carry 2 million per claim, 2 million aggregate. So you're worried about that, but then you're also worried, okay, maybe we have a large ransomware exposure here. So I want to make sure that if this client that's contractually requiring 2 million, that I still have that just in case something else goes wrong inside of my business. I don't want to sour that relationship. So with that, maybe you could look at, say, a 2-4, 2 million per claim, 4 million aggregate in the year. And let's see what else. Yeah, don't be penny wise and pound foolish with this. So I'd always recommend you look at the next higher option for cyber insurance in terms of overall limits, just to kind of see what that costs, keeping in mind how the sublimits may be affected by this, what the policy language is, what the coverage features are, etc. Please work with a specialist if you're going to do this. Generally, like, the general insurance guy down the street, he's not really going to have a lot of insight on this and may kind of steer you in the wrong direction potentially. So make sure you're actually digging into this, working with a specialist, and you know what you're getting at. Now let's talk about, I talked about all these reasons why you should be dubious of studies and dubious of insurance guys. Now with this, here's some other things or some other considerations I think you should do instead. Sit down with everybody in your business and go, okay, what is most likely to happen that could be covered by cyber insurance, and what would that actually cost the business? What's less likely to happen, and how much would that cost as well? So for example, maybe you're like, ransomware. You're like, hey, so over the last 3 years, we've gotten ransomware twice. So most likely if we're going to get hit again, where do you think it's probably going to be ransomware? Well, maybe that's not a big ticket item compared to something that's less likely to happen, which would be transferring $1 million to a bad guy. So look at what's most likely to happen, what's less likely to happen that could still potentially cost a bucket load of money, and make sure you're accounting for that in your overall limits and sublimits within your policy. Think about how the policy actually, or the quote, actually covers that particular exposure, or does it cover that exposure to your business at all? If you can't find that specific coverage for whatever exposure you're trying to get to, obviously there's some other considerations, other cybersecurity controls, policies, plans, procedures you need to put in place at your business to try and minimize your risk of facing that loss. And of course, at what limits? We're talking about overall limits, sublimits, potentially looking at split limits. So instead of 1-1, maybe you're looking at a 1-2 or a 2-4 or a 3-6 or a 4-8, et cetera, et cetera. And are you worried about multiple events happening, right? Are you the type of business owner where, it does come into play, I will say, this sleep good at night factor. So maybe you go through all this and you say, you know what? I think that we would be perfectly fine with 2 million in coverage per year with this specific policy that covers the risks we need. But I looked at what the 2-4 would cost, so going back to that split limit, and you know what? I would just sleep better at night knowing that if disaster struck, whatever time this year, that at the end of the day, I'm probably not going to get hit by lightning twice, but if I do, I can still sleep better at night, because if I exhaust my cyber insurance coverage, say the day after I bind that policy, I don't want to be concerned about that the rest of the year. So make sure you're keeping that in mind as well. And of course, there's a myriad of other issues I could cover here, but I'm just going to say, think about any other issues that you particularly have. Make sure you're looking at that policy to see, okay, are there specific rules you have to play by? Make sure you understand the ideas of claims and potential claims, reporting requirements. If there's specific things that have to be accomplished for the cybercrime or social engineering to come into play. All very, very important. And then finally, deductibles and retentions, that's going to be a big deal. As a matter of fact, I made an entire presentation just about cyber deductibles. Believe it or not, it's more complicated than you'd think. So I'll link to that right above here if you want to go ahead and look at that. Okay, with that, I will get off my soapbox here. This is Damage Control, Cyber Insurance and Compliance, 500 pages of everything you ever wanted to know about cyber insurance and compliance. You can download it for free at that link right there. With that, stay safe, take it easy. Oh, I forgot to add, if you learned something, if you like this, if you think there's other business owners that would benefit from this presentation, please feel free to like, share, comment, subscribe. All that jazz. We're almost at 300 subscribers as I make this video, so thank you guys very much. And with that, stay safe.